Adoption of banking and finance by organizations. How are organizations leveraging banking and finance? Case 2. Uber's initial public offering, or IPO. Before we get into the details, let's understand what an IPO, or initial public offering, is. An initial public offering is the process through which a privately held company issues shares or stocks to the public for the first time, also known as going public. The primary advantages a business has through an initial public stock offering is access to funds and great press coverage. In addition, the capital does not have to be repaid and does not involve an interest charge. The only reward that IPO investors seek is an appreciation of their investment and dividends. In September 2018, Uber's top executives were pitched by some of Wall Street's biggest banks, Morgan Stanley and Goldman Sachs. The bankers' presentations calculated Uber's valuation at approximately $120 billion.
People are excited about this latest round of tech visionaries disrupting everything from the way we communicate, the way we get around, the way we travel around the world. They're excited about it, but not euphoric. So that's sort of the nuance here compared to some previous generations of tech companies that have gone public to just absolute insane amount of euphoria. Another thing that's going on now is investors are really looking for companies to have a pathway to profitability. They don't necessarily have to be profitable now. In fact, Lyft is not profitable, Uber is not profitable, but investors need to get comfortable around the story, around the trajectory to profitability.
Valuation refers to the process of determining the present value of a company or an asset. It can be done using a number of techniques. Analysts look at the management of the business, the prospective future earnings, the market value of the company's assets, and its capital structure. One of the primary roles of an investment bank like Morgan Stanley is to be an intermediary between corporations and investors during the initial public offerings. Investment banks provide underwriting services for new stock issues. Underwriting basically involves the investment bank purchasing a number of shares of the new stock, which it then resells through a stock exchange. A major part of the investment banker's job is to evaluate the company and determine a reasonable price at which to offer stock shares. IPOs, especially for larger companies, commonly involve more than one investment bank. This way, the risk of underwriting spreads across several banks, reducing the exposure of any single bank. The bankers said they could convince investors that Uber was worth $120 billion when the shares were listed on the stock market. Uber went on to hire Morgan Stanley as the lead underwriter, along with Goldman Sachs and others, to make the company public, and to effectively make the $120 billion valuation a reality. According to Uber, they were worth the valuation as they were still in the early stages of capturing what they estimated to be a $12 trillion market that includes personal mobility, food delivery, and freight shipping. However, 9 months later, Uber was worth about half that figure. The public had reacted negatively to Uber's attempt to squeeze drivers' profits, along with a series of PR disasters that led to the #DeleteUber campaign, which drove both riders and drivers to other platforms like Lyft. Uber went public at $45 a share and has since dropped to around $41, making Uber's valuation $69 billion and officially making it as the stock market debut that lost more in dollar terms than any other American initial public offering since 1975.
We are now near the session lows for Uber stock. It's down about 9% in trading today. With the losses today, we are now talking about a stock that has now fallen by just around, call it 38% or so away from its $45 IPO price. Also interesting here is the market cap losses that we've seen. Since a market cap peak in June of around $79 billion, we now stand at about $48 billion in terms of total market cap for Uber shares. So again, a sharp move lower on the heels of that earnings report from yesterday. Keeping an eye on those shares. Of course, Lyft also in focus as well. Scott, I'll send things back over to you.
But while all of this was happening, big banks took home $106 million in fees. Uber's IPO changed the way companies were valued. giving them a very clear expectation of what to expect when developing their IPO. Eagerness and haste in drawing an IPO can be a disaster.